Welcome back. Telkom has reported improvement in its financial results, with revenue increasing to 43 billion rand and a 201 HEPS increase. These numbers come despite inflationary pressures and were driven by continued demand for next generation offerings. And join me now to unpack the company's performance in greater detail is CFO of the group, Nonkululeko Dlamini. Thank you so much for your time, Nonkululeko. Of course, an improvement in your financial metrics in this reporting period. Just frame that performance for us and really what made this reporting period different.
Well, thank you very much and good evening to your viewers. Indeed, a very good and solid performance in this financial year for us at Telkom, and a number of areas of focus that we've driven in the year. One has been to ensure that as much as we know that there is challenges in the economy and customers are quite strained, we still were able to see a growth in our subscriber base, basically, and we've now surpassed 20 million in our business in the mobile space, which is quite significant, coming from around 18 million customers. That's an 11.9% growth. So that on its own was quite significant for us in driving the performance that we see. But also we've been working on improving or rather working with our customers in value proposition that would assist in ensuring that we see much more in the prepaid space specifically, and we've seen much growth in that regard as well. And this has resulted therefore in quite an improvement in our EBITDA line, driven by the top line. But as you indicated earlier, we've also been driving cost optimization programs to just ensure that we live within the size of our cloth. It has also contributed positively to our EBITDA line, which then flows to the free cash flow that we are reporting, a positive 400 million, coming from a negative of 2.7 billion in the previous financial year. So a combination of improvement on the top line, cost optimization, and strong profit line has resulted in a strong free cash flow. But also we've been driving quite strong efforts in ensuring that we manage our working capital as efficiently as possible. And that has also contributed in seeing a positive free cash flow, amongst other things.
Yeah, really quite interesting seeing those milestones there, particularly when you look at the core profit, also the HEPS, but also the free cash flow. But I quickly want to go into that top line, because you could say there was tepid growth there of 1.6%, and I do believe that it missed market expectations on some level. Is that just a signal of the tough macro environment that you are operating under?
That as well, but if you just look at the detailed breakdown of our revenue makeup, our mobile business grew, and it's a significant contributor to this number, because of the top line of 43.2 billion, it's 22.6 billion, and that grew by 4.5%. We also saw significant growth in our IT space at 10.4%, but we're also dealing with some of the legacy areas in relation to corporate-driven kind of revenue. Fixed line, nobody still uses, or not as many people still use voice and fixed line, and we saw a reduction. And we've indicated to the markets previously that this is an area that is dropping in size and revenue, but we're quite comfortable that the growth in the next generation part of our business has now grown at 7% and is quite significant in this regard, even though we continue to work on exiting an element of the legacy business. So that is a combination of what brings the 1.6%, a drop in the legacy business, but significant growth on the next generation, specifically mobile and fiber space.
Yeah. In terms of that cost optimization, how much more runway do you have in that? And also, I understand there was also restructuring costs in the base. Are those worked out of the system?
So the restructuring largely happened in 2023 financial year, and we would have put in some provisions or in that regard, and we had to deal with the actual cash outflows in the current financial year in relation to the restructuring. But we are looking broader in terms of just the cost management and other areas, not only restructuring. We believe there are other opportunities to try and automate as far as possible and optimize the cost in that regard. So we would continue with the programs to look for opportunities for managing costs down.
Yeah. Telkom has spoken of a measured approach towards capital expenditure. What does that look like? What are the priorities here?
So again, if you look at our capital expenditure approach, one, we want to focus on investing in areas that will ensure returns, but also the next generation kind of technology. And that is has been the focus from where we basically prioritizing the capital expenditure. But also, if you go back during the COVID period, there was significant investment made, which is giving us the benefits in these current periods. So it's measured, but also a focused approach. If you look at how much we've spent this year of 6.1 billion, over 70% has gone into the fiber business, into the mobile space, because that is the areas we're focusing on. And you may recall that we participated in the spectrum recently, and we've had to build that in our capital expenditure in the current year. So there is a very focused approach in the next generation kind of investment, and we see that paying off in the medium to long term.
All right. So Nonkululeko, just as we wrap up the conversation, where are you working on building this momentum of your financial performance that we saw in this reporting period, at least in the short to medium term?
Yes, so we will continue looking at opportunities to grow the top line. It's quite critical in a competitive environment indeed, and an economically challenged space. But we do believe that there are still opportunities to work in value propositions that will assist us to improve our revenue line. We will continue to look at opportunities to manage cost in comfortable levels. So we've got particular priorities, in fact, with regards to, as I indicated, next generation related revenue growth areas. And we can see that we call it a data-led strategy that we are driving, because we can see that that is where the significant opportunities are going to come from.
All right. Well, thank you so much for your time and giving us deeper insights into those numbers. That was Telkom's Group CFO, Nonkululeko Dlamini.